Okay, so this is general here. So for equity investments, we are using the fair value method. Just this is kind of like what's coming up in the future chapters. Don't worry about it too much for what we have today. So if I am buying into a company and I have less than 20% of the company, which generally is probably most of us, right? Unless, why would you be taking the CPA exam? I'd be on a yacht right now. So you are buying just 2 shares of Apple, even 100 shares of Apple. That still doesn't give you 20% of the company. That's fair value method. Equity method, this is when you're buying between 20 and 50% of the company. So this could be one company buying 20% of another. This could be an individual buying 20% of another or 25% of another. But I mean, for the purposes of the exam, we're dealing with companies buying companies because, right? So companies' balance sheet, companies' financial statements. There are two kinds of things here. We'll see the cost method and equity method, but we'll see that in the equity method section. And then consolidations. So if you own more than 50% of the voting stock of the company, it's pretty much a subsidiary at that point. So you consolidate the financial statements. You take the parent subsidiary's financial statements, smash them together, do a bunch of different things to them. Intercompany entries, we'll see that later on. But this is what's ahead for us in equity. But like I said, we're going to focus mostly on debt here, just giving you a preview of what is to come. So equity investment categories. Let's see here. Again, not too crazy. This is what we'll see later on. Well, how do we value if we own less than 20% at fair value, right? How do you value your own stocks? Well, you value them based on what the stock price is, right? That's the fair value. Well, you also, if you're owning between 20 and 50, right? We said equity method, consolidation method, nothing too crazy. We'll see those later on. You don't recognize these unrealized holding gains and losses. You treat them differently for equity and consolidation method. We will see the treatment here later on. Don't want to get into this too much, but if you wanted to do those equity sections and then come back to this section to kind of refresh and revisit, see where you started, this would help you visualize, kind of the whole process.